An agricultural company and a tech company are on this week's pick list for growth and income stocks. Todd Bunton did the picking. He's here with us to tell us more about each one. So the agricultural company is a well-known company, Deere.
Yeah, Deere and Company, founded in 1837, well-known for their agricultural equipment. They also have construction and forestry equipment too.
Yeah.
But agriculture business is the lion's share of revenue here. Obviously, we know them for their green tractors and combines.
Right.
Company's been doing well. They just came off record first quarter earnings. And that was driven mostly by relatively high commodity prices and strong farm income. So North American demand was very strong. They saw a 16% increase in agricultural and turf revenue.
Okay.
And earnings beat by 4 cents. It was up 27% year over year. Very solid quarter. And analysts revised their estimates significantly higher for both 2013 and 14 off the quarter, sent it to a Zacks rank of 2. So it's got good earnings momentum here. Based on consensus estimates, analysts expect 12% earnings per share growth this year, 5% growth next year. And that's based on, again, relatively high commodity prices and strong farm incomes. So as long as corn and all that stays relatively high, Deere should continue to benefit. So you've got a good growth story here. You also have a very good income story. They pay a dividend that yields 2.3%, and the company just announced its 11th dividend hike since 2004. And I brought with me here their dividend history going back to the year 2000. You can see they've increased their dividend at a compound annual rate of 13%. So very solid income here. And you're getting all that at a reasonable price. They traded just 10 times forward earnings. So there's a lot to like about this company.
Okay. The technology company is an old line company as well, Cisco Systems.
Yeah. They've been around since 1984, went public in 1990. They actually joined the Dow Jones Industrial Average in 2009. One of the big tech companies. They're focused mostly on networking equipment for commercial and residential customers. About 40% of the revenue comes from overseas. The company is always acquiring. They've made over 100 acquisitions in the last 10 years. So their product portfolio is continually expanding, but say their big focus is still on networking. And they came off very solid second quarter results. They reported on February 13th. Earnings per share also beat by 4 cents. It was actually, I was looking back at their history, and they've beaten estimates every quarter going back to 2008. It's a very solid earnings momentum here. They saw analysts revise estimates higher off the quarter, and that's what I brought with me here. You can see the two biggest factors of the Zacks rank are agreement and magnitude. You can see analysts almost unanimously raise their estimates after the beat, and the magnitude of the consensus estimates has increased pretty moderately, or pretty decently, I should say, for both this year and next year, and that's why it's a Zacks rank of 2. So good earnings momentum, a very good income story. They have over $46 billion in cash on their balance sheet, and they generate strong free cash flow every quarter, and they return that to shareholders through stock buybacks and through continuous dividend increases. Pay a dividend that yields 2.7%. Very solid for a company like this. And if you look, their valuation is very attractive too. They traded just 11 times forward earnings. Over the last 10 years, they traded at a median of 18 times. So there's a lot to like about this one as well.
Okay, do you own either one?
I do not.
Check out other stock picks and stock picking strategies on our website, Zacks.com. They're all right there for you on the homepage. So get on over there if you're not there already watching this video. With Todd, I'm Terry Ruffalo.